Jiva's to YouTube channel. Now we see the standard costing, cost accounting, 6th semester. Standard costing means standard cost known as planned cost, predicted cost, scheduled cost, specification cost, etc. The deviation of actual from standard is known as variance. Standard cost means predetermined cost. If actual cost is less than the standard cost, it is favorable. Once again I say, if actual cost is less than the standard cost, it is favorable. Effect on profit. Next, on the other hand, if actual cost is more than the standard cost, it is on adverse or unfavorable. Effect on loss. Once again I say, on the other hand, if actual cost is more than the standard cost, if as an adverse or unfavorable, effect on loss and is known as adverse. Next, so there are 4 types of variance. First one, direct material variances, direct labor variances. Third one, overhead variances. Fourth one, sales variances. Next, first now see the direct material variance. So the following material variances could be calculated. Next, direct material cost variance, direct material price variance, direct material usage variance or quantity variance, direct material mix variance. Fifth one, direct material yield variance. First, now see the first one formula, direct material cost variance. Direct material cost variance short form DMCV equal to standard quantity into standard price or minus actual quantity into actual price. Next, see the second one formula, direct material price variance, actual quantity into standard price minus actual price. Next, we see the third one formula, direct material usage variance, standard price into standard quantity minus actual quantity. Next, fourth one formula, standard price revised standard quantity, standard price into revised standard quantity minus actual quantity. Next, now see the revised standard quantity. Revised standard quantity equal to total weight of actual mix divided by total weight of standard mix into standard quantity for each one of material. Next, fifth one formula, last one apply, direct material yield variance. Direct material yield variance formula, standard cost per unit of output and into standard quantity for actual mix minus actual output. Next, now we see the exercise sum 10, number 10, page number SCV 105, Management Accounting, book author A. Murthy and Gurusamy. 10th one, from the following data calculate material cost variance, material price variance, material usage variance, material mix variance. Next, sum name of the material XYZ, standard quantity, standard rate, actual quantity, actual rate. Next, now we go to the solve the problem. First one, material cost variance. Material cost variance formula, standard quantity into standard price minus actual quantity into actual price. X, now take the X equal to 8000 into 1.05 minus 7500 into 1.20 equal to 8000 into 1.05 equal to 8400 minus 7500 into 1.20 9000 equal to 600 adverse. Next, we see the Y. 3000 into 2.15 minus 3300 into 2.30. So 3000 into 2.15 equal to 6450 minus 3300 into 2.30, 7590 equal to 1140 adverse. Next we take Z equal to a standard quantity 2000 into standard price 3000 3.30 minus actual quantity 2400 into actual price 3.50 equal to 2000 into 3.30 equal to 6600 minus 2400 into 3.50 8400 equal to 1800 adverse. Total 3540 adverse. Next we see the second one formula, material price variance. Material price variance formula, actual quantity into standard price minus actual price. Now take the X, first one 7500 actual quantity into standard price 1.05 minus actual price 1.20. So 7500 into minus 0.15 equal to 1125 adverse. Now next one y 3300 actual quantity into 2.5 standard price minus 2.30 actual price equal to 3300 into minus 0.15 495 adverse. Next Z 2400 actual quantity into 3.30 minus 3.50. So 2400 into minus 0.20 equal to 480 adverse. Total adverse 2100 adverse. Next third one, we see the third one, direct material usage variance. Standard usage variance formula, standard price into standard quantity minus actual quantity. X equal to standard price 1.05 into standard quantity 8000 minus actual quantity 7500 equal to 1.05 into plus 500 equal to 525 favorable. Next y equal to 2.15 into standard quantity 3000 minus actual quantity 3300. So 2.15 into minus 300 equal to 645 adverse. Next we take the Z equal to 3.30 standard price into standard quantity 2000, actual quantity 2400 equal to 3.30 into minus 400 equal to 1320 adverse. So y equal to 645 adverse plus Z equal to 1320 adverse minus X equal to 525 favorable. So 1440 adverse total. Okay, next last ones we see material mix variance. Standard price into revised standard quantity minus actual quantity. Revised standard quantity equal to revised standard quantity formula, total weight of actual mix divided by total weight of standard mix into standard quantity of each material. So now apply the formula. X equal to total weight of 13,200 divided by 13,000 total weight of standard mix into standard quantity of each material 8000 equal to 8123. Y equal to 13,200 divided by 13,000 into 3,000 equal to 3046. Next Z equal to 13,200 divided by 13,000 into 2000 equal to 2030. Now apply the formula material mix variance, standard price into revised standard quantity minus actual quantity. X equal to standard price 1.05 into revised standard quantity 8123 minus 7500 equal to 1.05 into 623 equal to 654 favorable. Next y standard price 2.15 into revised standard quantity 3046 minus actual quantity 3300 equal to 2.15 into minus 254 equal to 546 adverse. Next, last one, see, Z equal to standard price 3.30 into revised standard quantity 2030 minus actual quantity 2400. 3.30 into minus 370 equal to 1221 adverse. Total 1113 adverse. Thank you.